Welcome to Commodity Chat by Lotus Advisory Services from the house of akshayashiv.com. This shoot is being done at 8:30 a.m. on Thursday, November 21st, 2013. Herein I give a wrap-up of the commodities complex, both fundamental and technical as we see it. 3-4 macroeconomic data that have come out this morning, which is expected to rule the commodities complex trend today, are the FOMC minutes were released from the US late last night. They have adopted a fairly bearish stance as evidenced by the trend of bullions this morning. They have said that even as the US economy is improving, the stimulus needs to be tapered down at the earliest, probably in the next few meetings. The markets are already talking about the tapering to begin from March 2014 onwards. Still some way needs to go before this is done, is what the Fed Chairman Bernanke has said this morning. The second data that has come out this morning is the China PMI manufacturing data at 50.4 as against the previous figure of 50.8. So long as it stands above 50, it seems mild positive only. A break below 50 could see the figure as a deceleration in the progress of the economy. INR stands at around 62.5 as it closed last evening. It's expected to trade in the range of 61.8 to 63. A breakout on either side on a closing basis could see further trend or shape up of the INR and the economy. Nifty cracked in the last half hour yesterday to just around the 6120 levels. Expected to continue a bearish stance, expected to open at around the 6080 mark. Our view is that it could test supports of 6050, 6030. A break below that could test up to 5980. Fresh buying in equities could come at those levels, or this could present a fresh opportunity for the same. On the upside, strong resistance seems to be at 6180 to 6200. On a positional basis, only a close above 6300 could see further upside as far as equities go. On a weekly basis from now on, in our photo shoot presentations, we'll be coming up with levels for both the Nifty and the currencies as far as USD goes, as also any trading picks in equities on the cash segment if we come up with. I now talk about the individual commodities. This bearish stance of the FOMC, as evidenced in the minutes last night, has brought down the bullions complex. Gold trades at around the 1247 now, hit a low of 1242 in early trades, now trades below the pivot of 1250. So long as it remains below 1250, expected to test 1230 and 1210. Resistance or upside could be seen on a break about 1265. On the MCX, closed at around the 30,085 mark. It is expected to open lower, and supports are seen at 29,900, 29,800. A close below 29,800 could test levels of 29,600. On the upside, immediate resistance is seen as 30,200 and 30,350. Silver is now trading at $19.85. Strong support next is seen at $19.50. A break below could see $19. Resistance is now seen at $20.30. On the MCX exchange, closed at around the 45,000 mark. Expected to open sharply lower at around the 44,500 mark. Expected to test 44,000. A break below 44,000 could test even 43,000. Resistance is now seen at 45,500 to 45,800. Of course, as far as bullions go, all these could not materialize if the INR begins to weaken again on account of strengthening of the US dollar because of the FOMC minutes. Any strengthening of the US dollars could only hold up bullions to the extent above and would negate any drop in the dollar on the commodities complex. Crude oil trades stable at around the $94 mark. On the MCX, closed above the 5900 at around the 5914 mark. Resistance is seen at 5950. A break and sustained volumes above 5950 could test up to 6000 to 6030. On the flip side, 5880 is a strong support level. If breaks below, could test 5850 and 5800. Positionally weak only below 5800. Positionally positive on a close above 6000 to 6030 mark. Natural gas trades mild positive above the 230 mark, 232, 234 and 236. On a positional basis, so long as 238 gets taken out, more upside could be seen on a positional basis. Immediate support is now seen at 228 and below that 225. Coming to the base metals complex, yesterday we saw a rally on the upside, mild as far as copper is concerned. Now it closed at around the 436 mark. A break below 435 to 434 could again see levels of 430. On the higher end, immediate resistance is seen at the 440 mark, positional resistance at 445. A close below 430 could see further downside in the market. Nickel trades weak below 840 with resistance at 850. A break below 840 could see 830 and 820. Zinc is expected to trade weak below 117 with resistance above 118 and could test supports of 115. Lead turns weak below 128, resistance at 129.50 and could test supports of 126 to 127. Overall, INR could decide the trend in the market today. Bullions remain bearish. Crude as per levels given on the upside and downside, and base metals trend sideways. Further updates and live calls would be given to our members and posted in our website at www.akshayaship.com. We urge you to visit our YouTube presentations on a periodic basis for live updates on the commodities complex. Have a safe and profitable trading day. Thank you.